Welcome back to the Retire Young podcast. Don't forget to subscribe to the Retire Young podcast on Apple Podcasts, iHeartRadio, and Spotify. If you're just tuning in, Al was shedding some light on what is happening in these financial markets and what people are reacting to. A lot of people are reacting to news, which is just opinion. So that's why it's so important to have a strategy to trade with the institutions, not against them. It's just that supply and demand. When there's more buyers than sellers, price will go up. When there's more sellers than buyers, price has to go down. And that's exactly how everything works in life. And that's how it works in the financial markets as well. Now, there's a lot of people, as I kind of ended that last segment, I mentioned there's 22 million jobless claims in the past 3 to 4 weeks here. And now is probably the most important time for people to generate extra cash, because a lot of people probably lost their paychecks. I mean, we got these stimulus checks coming through. Some people aren't getting those. And when you're able to create another source of income or cash flow, you don't have to scramble and have to struggle to make ends meet. So, Al, when you're helping people create additional income, and that's what it's all about. I mean, everybody wants more income coming through. No matter how successful you are, it's always good to have more. And it's good to have more in times like this when you maybe have less income coming through from your job. How are you helping people with the multiple asset classes create income in these markets, but to do it in a way where it's comfortable, but it also makes you more confident investing in the markets too?
Yeah, the big word right now is unknown, because there are a lot of unknowns. A lot of people are at home now, not working, and relying on the some of the things that the Fed and the government is doing. I mean, they're throwing the kitchen sink, the bathroom sink, and the downstairs
tub, everything.
Right, but people still are just not quite sure what's going to happen to them. And will your job even be there when we come out on the other side of this? Because there are going to be some industries that change. Some companies will not make it through here.
Well, for instance, Best Buy just laid off, I think it was 50,000 employees, and they're saying it may be 3 to 4 months before some of them get back to work.
Right. Yeah, and there may be some companies that just don't make it through this, and there will be some new companies that come out of this because the way that we live may change down the road. So there's going to be some great new opportunities. You look at companies like Apple and Google and Amazon. If you go back 20 years ago, those were just, those are companies that were just getting started. Well, there may be a number of companies like that you'll have an opportunity to get into when we come out of this and we see what is going to be the impact on the economy. But why is it so important to have cash now? Well, number one, there is that unknown about your job. The bills keep coming in. That's the constant that always will be there. The bills will keep coming in. We could go through a high period of inflation. There could be a food shortage, for example, higher costs, because pretty much every point within that food chain, the production of food is going to be impacted. This is a great time also to save, because if you're at home, potentially your costs are going down. So how about just putting some money aside for those retirement years down the road?
I'll tell you one thing, Al, those people that got that sock drawer full of money are happy right now.
You've been counting your socks here lately, Josh?
No, I've been counting the pennies in there and the dollars.
Yeah, and things are changing also as far as how people access cash right now, not just related to their incomes, to their job salary, but there's a lot of people out there that are relying on dividends for income. And you know what? A lot of those people may be in for a big shock, because a lot of companies may have to shelve those dividends for a while, and the government might even put some pressure on it. If you're getting a loan from the government, they may put pressure on to either reduce or eliminate those dividends. And when you think about some of these companies whose price has been really hit hard, that means that the dividends that they're paying out percentage-wise has gone up, and they may just not have the cash to do that. So what do you do? Other than your job, other than dividends, or maybe selling some currently held equities, or worse yet, taking money out of your retirement accounts before you retire, that's the last thing you want to do. And unfortunately, back in 2008, a lot of people wiped out their retirement accounts because they had to draw cash. They had to get cash from somewhere. But there are other ways of doing it. You don't have to sell anything. You don't have to sell assets that you own. you can use leveraged assets. We talk about this every week, Josh, but I think now is the time to really understand what the benefits of these leveraged assets are. First of all, you know that if you have a stock portfolio or a mutual fund portfolio, the only way you are going to make money is if the market goes up. But the market doesn't just go up. And we got a very strong reminder of that about a month or two ago. The market goes down, and sometimes it goes sideways. So there's three different directions it can go. You are probably in a portfolio that will only make money in one out of three directions. The leveraged assets that we're talking about the futures market, the foreign exchange market, commonly referred to as the Forex market, and the options market. All of those can be used in an up market and a down market and sideways market. So you have the opportunity to have the potential to make money in three out of three directions, not just one out of three. And there are a lot of people that are making most of the money that they make in the markets during down markets. And most of the people that are coming into our centers, Josh, and before we had to kind of go virtual, and still the people that are contacting us and want to listen to or participate in these classes online, they're saying that they want to know how to make money in a down market. No one's ever taught them how to do that. And they also want to know how to protect themselves. And one of the things we've been talking about for years on this radio show is protection, insurance on your portfolios. I don't know if any of you were able to take advantage of that. Hopefully you did. But if you did, you went through the big drawdown part of what's happened in the market being protected. So if you had a loss, it was a minimal loss, or maybe no loss at all, or maybe you made money by using that insurance policy properly.
Yeah, and what's important to know right now is the markets, they're viewed right now as a negative thing. Well, treat that as a positive. And you mentioned earlier, what is the new opportunity that's going to come out of this? There's going to be companies that come out of this where it's a huge opportunity. But here's the most important thing to understand. You can dictate that. Don't let somebody else dictate your future. And it's how to utilize the markets, because you have leveraged asset classes. Like you said, you can take a smaller amount of capital to control a much larger asset with the futures in the Forex market. I was doing a podcast with a good friend, David, last night, and we were talking about the Forex market. He's a Forex trader. And he says, Josh, I am not a morning person. He can do that 24 hours a day. He can trade in the evenings. He can trade in the middle of the night. That's the big thing. And when you can understand that these financial markets give you those opportunities, that's when you have more freedom, because what the market does, it gives you two things: time and location. When you can do that, if you have an internet connection, that's all you need. Now, Al, the futures market and the Forex market, explain what those are. I mean, I just kind of mentioned they are 24 hours. You mentioned earlier that you have leverage with them, but everybody knows the stock market, and that's pretty much it. Options, you utilize stocks or ETFs and options. What are those futures in the Forex markets? And maybe why would somebody want to gravitate towards that other than stocks, beyond the leverage in the 24-hour market?
Yeah, the interesting thing, Josh, is that I would say the majority, close to 100% of our students choose to trade one of those leveraged assets especially instead of mutual funds, but oftentimes in lieu of trading stocks. And the reason, we mentioned a couple of them. The futures and Forex trade essentially 24 hours a day. They're basically round-the-clock trading opportunities there. And they have leverage, which means that every dollar that you're using in one of those assets, one of those investments, has a multiple effect. That's leverage. So maybe you have an account that's $1,000 or $2,000, and maybe that's a margin account. And with those leverage assets, you can control sometimes $100,000 or closer to I know at one time. It was like $187,000, $188,000 that you could control in a relatively small futures account.
So, Al, Al, with that leverage now, the Forex market is roughly 50 to 1, futures 20 to 1, roughly, depending on what you're trading there. But how do you do that safely? I mean, that's a double-edged sword.
Yeah, absolutely, and that's the most important thing. Don't even think about trading one of those assets unless you understand risk and risk management. And that is the number one thing that we teach. We don't want our students, and you shouldn't do this whether you're a student of ours or not, you should never invest or trade in anything unless you understand what the risk is. You know as much as possible about how to control that risk, and know that there's enough profit in any trade or investment that you are getting involved in to want to take whatever the risk is there. We show our students how to identify a minimum of a 3-to-1 risk-reward ratio, where every dollar you are having at risk, you want to make a minimum of 3 times that. That doesn't mean that you're just going to make 3 times that. It could be much higher than that. But if you do that as a minimum, you can lose half of your trades or more. You can still make money as long as you have the proper risk-reward ratio. You have the potential to do that. So the leveraged assets, you can have a smaller account, which makes this accessible to more people because you don't have to have $20, $30, $40, $50,000 in a trading account to do that. But you have to know how to control risk. That's the number one thing that we teach. No matter what the asset is that we're talking about, we show you how to identify and control that risk. Because you can't get away from that. But you have the potential, if you use this properly, to have some really good returns. That the opportunity is there, and especially when we're looking at a market that is still going to go through a recovery phase. If you're using something that has that leverage, you have the potential to do better during that recovery. A lot of you that are just going to hold on to what you have, understand that the market is going to come back. At some point in time, we'll have another record high market. But while you're waiting for that to happen, wouldn't it be great to understand or to be able to use something that can generate some cash for you now, whether you need it for your just everyday living expenses, or whether you want to use it to start putting a little bit more money into your retirement accounts.
And that's really important to understand, too, is this is not a be right every time game. But like Al was talking about at the beginning of the first segment, you put the odds in your favor with low risk, high reward, high probability entry points. And you talked about that 3-to-1 win risk ratio. I mean, I'll let our listeners do the math, but if you're right 3 out of 10 times, you should be doing okay. Do the math yourself, and it's just strategy, and you have to have that strategy, but you have to follow that every single time. That's why it's so important to have that plan. Don't go do this without learning how to do that. That's why we're having these investing classes. Thanks for listening to the podcast. Don't forget to check out our website at retireyoungaudio.com.